Good morning. Today is January 24th, 2024, and back with another edition of the Wednesday Live Show. And it's been kind of a crazy market lately, with the market seeming to just, it has so much inertia to the upside. It's incredible. I mean, just day after day after day, it seems like any weakness is being bought. We're right in the thick of earnings season, kind of at the beginning of earnings season still, but lots of wild stuff going on. Stocks are having pretty big reactions to earnings. Good earnings, good numbers, and they're up big, and vice versa. So, but anyways, I wanted to start this week by something I noticed, and everybody else probably noticed, is starting with the weekly chart of the S&P. Out of the last, I believe this is like 13 weeks here, right? So we had 9 weeks in a row up, one down week, that was week 10, and then, the last 3 weeks so far, of course, today's only Wednesday, another up week. So that's 12 out of 13 weeks up, assuming that, well, you could say 11 out of 12, right? Because this week's not over yet. So, um, it's going to be interesting because this morning we had a gap up on the daily chart, and we're seeing a little bit of weakness early on. So the daily chart really looks crazy. But before I switch over to that, the thing to notice here is obviously the big sort of cup and handle pattern on the weekly chart, and of course the breakout to new highs. And of course, you always keep in mind that inflation adjusted, right, from the all-time high. Well, I mean, we're at nominal all-time highs, but this thing needs to be at about 5,300 in order to be at a new all-time high inflation adjusted. So whether that really matters or not is debatable, I suppose, but it does come into play. So economic numbers have been pretty good. And of course, everybody is focused on what the Fed's going to do. There is a January meeting. And that's going to be pretty important, I suppose, because the market seems to be, and this is debatable too, but the market seems to be pricing in, rate cuts beginning in March, and the odds of that, increase and decrease with every economic number, it seems like. But overall, I think that the market is expecting that the Fed is going to lower rates at least a few times next year, beginning in March. And so, that seems to be the prevailing narrative of why we're seeing this kind of rally here. So, just incredible though. All these up weeks in a row. I hadn't really paid much attention to it. Back here, at the end of the year, they were talking about 9 weeks up and all this type of stuff, and that was, and then we had the down week. But just looking at this, pretty incredible actually. Um, every time I draw lines and move the chart around, you can see this is the daily chart. You can see the gap up this morning. We had sort of the big breakout last week, right? Market was hovering just around 4,800, just under it, and then on, I guess that would have been Friday, we had the big breakout to new highs. And then ever since then, the past couple of days have been really kind of tight nothing days, right? Like on the switch over to candlestick chart here. Oh, my candlestick chart is a little wonky here, but yeah, you can see the past couple of days. So today's Wednesday. Monday and Tuesday were kind of dull days. Yesterday it looked like we were going to sell off, and then towards the end of the day it managed to rally back up, but the ranges have been extremely narrow. And then this gap up this morning, just kind of begs to be at least sold down a little bit, right? The funny thing is Monday, and I know my scale's a little screwy on this candlestick chart here, but Monday, this little, what would have looked like, I guess, an evening star, I mean, that kind of looked looked like that might be at least, due for a little pullback here. So, but anyhow, back to my regular chart. Now let's see. The other thing I wanted to point out here. Let me see if this is the. Yeah, here we go. Well, you can see the resistance area that I drew here. Here's something to take a look at on this weekly chart here. Is that, and this is the weekly chart again. Is that no, I'm sorry. This is the daily chart. The daily chart. We're back. RSI is back poking over 70, at least so far. So back over here when when we were talking about the RSI being over 80, we actually did get a little bit of a pullback on the daily chart, right? Like right there. That was the last sort of dip right at the very beginning of the year, but um, you know, on a very near-term basis, the RSI is important. What I wanted to look at was, here we go, the weekly RSI, which probably is even more important, right? So this is kind of interesting actually, because the weekly RSI is, notice that, and I know that well, this is a pretty good look. It poked over 70 right here back last summer after the big run up, right before we had fairly sizable correction. And this was a fairly sizable correction, and it went on for quite some time, from almost like August till mid-October. And over that period of time, remember how bearish everybody got, right? Like when this thing started selling down here around these lows, the CNN fear and greed meter was at extreme fear, and there was a lot of fear, right? And at the time, I'd drawn a couple of trend lines here, and so it's kind of amazing how it sold right down to support and then bounced. But at the time, I don't think anybody expected, beginning in November, that it would just run straight up the new nominal all-time highs. So, but it was, I mean, the pattern itself, I kept talking about how, it was like looking like a big cup and handle pattern, but it just seemed difficult to visualize the type of run we've seen. I mean, normally you would expect, a little bit of a rally, that type of thing, found a little bit of resistance around this trend line, but this sort of straight up run we've had is pretty incredible, quite honestly, in the face of, all sorts of geopolitical tensions and crazy stuff, and record debts and deficits, and it's questionable whether how the real economy is actually doing. Starting to see a lot of layoffs and that type of thing. So, but the thing to notice here, the thing to note is where the weekly RSI is, and so it's kind of getting into nosebleed territory, as you can see over here, and this is a good reason to take any indicator with a grain of salt. Back during this humongous run up in 2021, the straight line, which was, that was the snapback rally from the pandemic sell-off. But anyway, you notice how the RSI on the weekly just, it basically hovered spent a lot of time overbought over 70 as the market did continue to go up. And then there was a few little dips along the way on the weekly time frame. But anyway, what's notable here to me anyway is the fact that, whoops, these wacky charts. What's notable is the fact that the last time, and I know this is it kind of skews the chart a little bit. So I haven't found, there's no setting in here. In my old charts, I used to set this thing so that, like, 90, it was like 90 and 10 or whatever, but I haven't found a way to do that. But anyway, here's what's notable is the last time that the RSI poked over 70 was right here after this run up from March to mid-July, well, almost the end of July, and then the subsequent sell-off was pretty significant, right? I mean, it's hard to judge it by the scale here. It's hard to tell how significant it was, but I remember at the time because this is a weekly chart, and so it was all the way basically from August until the end of October. Um, Pretty significant, and so RSI is at about the same spot there after, like I said, 13 up weeks, assuming this is going to be an up week, 12 out of 13 weeks up. So just maybe a note of caution there. I mean, the market clearly has an underlying bid, um, and a lot of individual stocks are doing great, and it's I think I read somewhere, but here's the thing. So I look over at CNBC and Kimberly Clark, is getting hit or whatever. So it's I hate to say it, but it's sort of a case by case. Oh yeah, stocks on track for 12th week and 13. So it seems like we've reached sort of a point where bears have thrown in the towel. Nobody can think of a good reason why the market would go down. The fact that it shrugged off every little bit of bad news along the way is also something to note. Let's look at the Qs here. Same sort of thing on the Qs. I don't have anything drawn here, but there we go. I figured I'd just stick with the same weekly chart. Oh, look at this. There's your pandemic sell-off back here. For some reason, when I look at the longer term charts, I always like to have that on the screen just for perspective, because we all know that, the S&P sold off like 35% pandemic sell-off. So I don't know exactly what the Nasdaq 100 did, but I always like to have that on the screen just to sort of give perspective from the subsequent run up, right? And then of course, the dip. So if that's not a textbook cup and handle pattern, I don't know what is. I mean, that's even cleaner, more textbook of a cup and handle than the S&P. So and then of course, something that's never happened before, from what I gather, is you got the S&P at an all-time high, and the Russell 2000 is still down 20% from its all-time high, right? I'm pretty sure that I read that that's never happened before. And like I mentioned on here last week, one of the sort of strange things right now is the fact that this little sort of pattern that we see on the chart here is very similar. Like this range breakout, sort of spike higher and pullback, is very similar to what happened back here in 2021. So just something to keep an eye on. Of course, you can see on here that the Russell pulled back to the 50 and 50-day and caught a bounce, and so it's doing some work here now at the top of the range. So it'll be interesting to see how that pans out. Yeah, very interesting pattern here. So Russell's got a long way to go before he, up to the all-time highs. And then of course, if you did the same thing I always talk about here, the inflation adjusted all-time high on the Russell's going to be well past this point here. So that's kind of interesting. Let's take a look at ARK real quick here. Look at ARK because this is a good proxy, my favorite proxy, I should say, for risk tolerance and the growth stock, the hypey kind of stocks, that type of thing that ARK likes. It's actually kind of a constructive pattern, and interestingly enough, I look for patterns on these charts, and so you can see at the beginning of last year where it bottomed out, and then rallied, and then spent all this time just sort of consolidating here, and then another rally, another consolidation right back to about the same lows, and then so you got 3 higher highs here. I suppose it'd be worth I thought I had a version of this chart that was marked up, but you got kind of a channel going on here, right? So so what I mean by so the fact we're at an inflection point here is you'll notice like the last time that it kind of hit the top of the channel, it had a pullback and a little bit of a bounce, and then it, worked its way back down. And so we've had the run up to the top of this channel, the pullback, and now it's at a point right now where it's either going to rally above. Let me zoom in a little bit further. It's either going to get back above 50 here. Oh, it's either going to get back above 50 or it's going to break down below 45. And that's going to be kind of interesting to watch. So this quite frankly could be, this is a pretty interesting trading vehicle, quite frankly. So it's extremely volatile, and of course, this run up here, and the interesting thing I've always thought that this is a really good proxy for sort of animal spirits and FOMO and risk tolerance and that type of thing, and it's just kind of interesting to keep an eye on. So let's see what else. Let's take a look at the price of oil here, because oil on a weekly chart, oil of course is very important when it comes to inflation expectations. And so, yeah, you can see that, the over and under here is 75. You can see the 200-day moving average seems to mean something here. Um, if oil heads higher, and the weirdest thing about oil is that you would think, with all the headlines and all the news that you see from the Middle East, you'd think that the price of oil would be it would be closer to 100. And then the other thing about it is that um, you have to wonder if the price of oil being kind of low or whatever used to be, I don't know if it still is, but somewhat, but it used to be a proxy for how strong the economy was, and the global economy, because the more the economy was growing, the more oil was being used. So, but of course, we've transitioned to a tech-based economy. Speaking of which, um, Apple earnings, weekly chart Apple there. There's a few interesting things about Apple too, is that had a pretty significant pullback there, just like the overall market into October, bounced up, and Apple's fighting. There was some bad news towards the end of the year there, so it was fighting to basically kind of regain. Yeah, you can see that on the daily chart there. So it ran up to the highs and then pull back to the 200-day moving average. So this is kind of interesting. This, just in the past week and a half or whatever, this pretty amazing bounce right back to where it was. So it's kind of strange, because with Apple, look at these gaps, like these gap down sell-offs, I guess on some sort of bad news or whatever. But it's interesting to see it rebound so quickly and so substantially. So Microsoft, of course, is the 800-pound gorilla of the market. Look at that, just absolutely incredible run on Microsoft. So same sort of thing here. It spent a lot of time, basically all of December into the first week of January, just kind of consolidating, and boy, that's a lot of sideways movement. Sideways movement right into the 50-day moving average, and then boom, took off again for another run. So, um, the thing of it is that I always talk about, well, I have talked about in the past, what I call inertia, right? And so when these like runs start, like this one back here, um, they tend to have inertia. People see it moving, and of course, once one of these patterns starts, then you just have to assume that, like like the law of inertia, an object in motion stays in motion until whatever it is. I forget the exact definition, but I think you know what I'm getting at. So an object in motion tends to stay in motion in that direction until and then of course there's the idea of the equal and opposite reaction. So is the market frothy? Yes. I think the market's extremely frothy, and I think that there's a lot of I've said this over the years at certain points in time, but it does remind me a lot of the dot-com bubble, right? So, valuations on some stocks are reasonable, and valuations on other stocks are astronomical. So, um, and that may, and of course, we have the sort of, like I guess it was back in the 70s that they called the Nifty 50 market or whatever it was, and so we sort of have that going too. There's a handful of stocks that really account for, the bulk of the moves. AMD, I always watch this thing. AMD's had like sort of a parabolic move here. The other day on, I guess it was Monday, right? Like the percentages are getting huge. Like this thing is getting extremely volatile. I think it was down like 5% or something or more. Um, but yeah, this is incredible. And the funny thing is that this pattern here, this pattern from mid 2023, there you go, like that. That is just, 'cause I mean, I kind of follow this stock. It's become one of the darlings. Obviously, Nvidia is the super big deal or whatever, but AMD has also been. There's a lot of textbook technical patterns on a chart like this. Just incredible. So pretty interesting. And then of course there's other times where it's just kind of sloppy, right? So, and speaking of Nvidia, let's take a look at that. So I think, yeah, Nvidia just absolutely incredible. This latest breakout here. And so this is also one of the, this has become one of the sort of must-own, almost cult status stocks. Almost probably this is probably like this is one of those stocks that I think every institution and every fund and every money manager has to show this in their portfolio, because it's clearly been, one of the market leaders. And of course, this is the number one holding of, all the AI hype stuff, right? So, I've noticed just huge prevalence of new ETFs. Now, obviously, the Bitcoin ETFs, there's like a dozen of them that all launched at the same time, but it seems like, there's just so many ETFs that invest in all sorts of weird stuff in that. And, so um, I'll have to do a little research on this, but, there's a lot of AI based ETFs and that type of thing. And so people put money into ETFs that are thematic, like, tech and AI, and just by virtue of that, they're buying Nvidia with it without and of course Nvidia, big growth company, and I mean they're showing great growth, but you gotta ask yourself at what point do how many times sales and what kind of PE in that, and does that even matter anymore? So there's no question that Nvidia is the market leader. You take Nvidia and Microsoft, put them together, and these are, as money goes into the market, which it always does. Um, the I always say the people that make out the best in these kind of markets are people that don't watch the markets and just put money into their 401k regardless of what the market does and don't pay any attention to it, right? Um, that's where the money is because then over the years when we get the big sell-offs and that they're buying shares and accumulating shares at all different prices, and then you get these run-ups. The only the only downside to that is, those periods of time, and there's been periods of time where the market, gets into bubble territory and gets so overvalued that finally, finally the dam breaks, and then it can take a decade to get back to where you were. But anyway, all that aside, just some incredible moves in some of these stocks. This is a daily chart too. I don't even want to look at the weekly of this thing. So, but you have to wonder. I mean, you have to wonder sometimes. Do I got a RSI on here? Look at the RSI on Nvidia. So in the 80s here. But again, it's all about. This is a daily chart. It's about inertia, right? And so I'm wondering if, here's a popular stock. Alibaba is one of the stocks and you can see just over the past couple of days. So China, obviously, that was the big news over the weekend, is that China's market has been, I think, was it FXI? China's market's just been tanking for. Let's look at. There's a weekly chart. Let's go to a monthly chart of this thing. Yeah, look at this. So, China announced that they're doing everything they can to prop up their market. And this is also kind of crazy because, back in the day, I remember this clearly, back in 2015, when there was a slowdown in China, or China was, market was tanking in that, it was taking the rest of the world down with it. That was the number one thing spooking world markets is that growth in China was what was supposedly driving the global economy. Remember when they used to talk about synchronized global growth, right? So anyway, the synchronized global growth, sort of came to a halt in 2015, and man, that just wreaked havoc on world markets. And so the most amazing thing to me now is, this many years later, nobody cares. And so, maybe all the global investments or whatever that were going into China or going into the U.S. I mean, obviously the U.S. market is the place to be, and the China's not the place to be. And so, I mean, if you look at this and you think about where it is in comparison to over the years, that's a long period of time. So, anyway, what I was talking about before, people average dollar cost averaging over many years into a market, well, hasn't worked out so well for China. So they got some real problems there. But anyway, you go back to the daily and you can see that this past weekend, someone threw in the towel over there and said, we got to prop up this market. And so that's what they're attempting to do. I've seen a lot of analysis on Alibaba about, how cheap it is, as far as this is probably like what's the Amazon of China, right? So this is the number one stock that I think everybody's going to take advantage of a potential rally over there. So it'll be interesting to see how it actually works out. So still got, still a lot of overhead resistance here, but this could be interesting. This could be interesting. A lot's going to depend on how the stimulus actually works out. So anyway, yeah, there's the SPY. Just looking at this, it's really it's tough to want to chase this at this point. So could it keep going? Sure. I mean, there's plenty of spots on the chart where it could keep going, but at some point. The inertia, the steam's going to run out, and then it's either going to consolidate, or we'll get a little bit of a sell-off. So it seems like it really seems like and I'm not sure when that Fed meeting is. I haven't been paying that much attention to it, so it's got to be coming up. Um, it's either next week or the week after that. I'll look that up. But I think maybe the market is kind of, it's got this inertia going, and it's going to be interesting to see what the Fed says on their, here in January in their meeting, and if they throw cold water on the idea of a rate cut, well, that could potentially be that could potentially be a catalyst for a little bit of retrenchment in the market. So anyway, um, we'll have to see. So join me here next week, and we'll talk a little bit more about that. Same